Hey everyone, it's Imran from Options Insight with your macro options spotlight. All right, so we did see equities continuing to drift yesterday, as the big tech earnings keep disappointing. Facebook obviously down 20%, but we had Amazon down overnight. That was a big miss on guidance. You basically had the stock down 20% at one point, and this is not a small stock, this is Amazon, for crying out loud, but it is showing down about 13% now. Commodities were generally quite quiet, but oil was slightly outperforming. We did see the dollar firmer after a marginally dovish ECB, as markets took terminal rates in Europe down by about 30 basis points after that. So clearly, Lagarde mentioning the potential for a recession in Europe, and the market taking that as they're not going to be as hawkish as they need to be to get inflation under control. And then we're also seeing US bonds remaining strong as the Fed pause speculation continues ahead of the PCE data due today. If we go over to the vol side of things, what do we see? Pretty much down across the board, a lot of red there, particularly Europe there down over a vol point on the day. And European vols are actually quite a bit lower. They're at 22 relative to 25 in the US, but that's because of the realized. Look at that realized differential, 10 vol points between S&P and Eurostox, which is a pretty inflated vol differential showing up in how much carry that you get in Eurostox right now. We do think that even though vols are down, we do think the VIX is going to probably find some support from here into the FOMC next week. We were thinking it was a bit of a sell in the low 30s. It's now back down to 27. I'll be surprised to see it go materially lower than here into FOMC. And then FX vols continuing to drift along with bond vols, but not at such a frightening pace. Carry-wise, already mentioned Eurostox, got some positive carry there. We have got some positive carry showing up in gold and oil as well, suggesting that maybe, the theta junkies out there might want to sell gamma. Personally, I would advise caution selling any gamma on oil because I think that market is just supercharged and, very susceptible to headline risk that can come out, whether it's from Saudi, whether it's from Biden, and we've got the midterms obviously coming up. Okay, and then also interesting to see the carry on TLT has completely evaporated. That has been coming positive for quite some time, but with the big moves now becoming much more regular, and we saw another 1% move on TLT up, saw a 3% move up on the week. That carry completely wiped out as implied vols went from 29 odd back down to 24 on TLT. So you see those implieds catching down towards realized where that carry then disappears. So not an obvious sell to be short gamma on TLT right now with the vol reset that we have seen. Okay, so that's the summary. Now, if we then have a look a bit deeper into what's going on in tech, markets obviously were generally softer throughout the day yesterday as the market digested the Meta down 20% on the poor earnings. And there was a bit of a sense that the melt-up narrative that's been building has gone a bit far too fast. After hours, both Amazon and Apple missed on guidance, sending Amazon stock lower. But, these are not small cap stocks. These are mega caps. And, where they always used to be in the $1 trillion market cap category, you can just see where they are now. So from the market peak, you had all these stocks as $1 trillion companies: Apple, Microsoft, Google, Amazon, Tesla, and Meta. And with epic drawdowns that we've been seeing in some of these names from the highs, Amazon's down 50% from the highs, no longer a $1 trillion market cap company. Tesla's down 46, 75% down for Meta. I mean, these have been annihilated. If you look at the group, they've gone from a nearly 12 trillion market cap group to only 7 trillion now, losing 5 trillion worth of market cap from the highs of the market, which is just unbelievable. We do still have Apple, Microsoft, and Google in that club. They're still, actually that's what they used to be. What they are now is 2, 1.6, and 1.2. So they're still massive companies, but just amazing to see that these companies that are that big can have 20% swings in a day. And I do think some of those swings are exacerbated by the short-term option volumes that are trading in these stocks, right? That has just become the instrument of choice for everyone to play these names. And it does push these names around probably disproportionately from what you would normally see for such large cap companies. Here you can see Amazon 5-minute chart. That candle was a 20% drop in a matter of 5 minutes. I mean, it's pretty brutal, that activity. All right, the stock has stabilized a bit overnight. Like I said, it's only down 13% now. We'll see how it plays out when the market opens. But in general, I think the futures are actually taking it quite well, that the generals of the market, these big FANG stocks, have just been disappointing after disappointment. And the futures aren't completely falling out of bed, which actually is relatively encouraging, I would say. All right, if we then look over at what else we're seeing in the vol side of things, realized skew. So this is something that I like to keep an eye on to see how the implied skew is relative to the realized skew. So that basically is the vol spot correlation. So you've seen, S&P here, HYG here. All of these dots have been moving in this direction, which is skew getting flatter. Now that's just the implied side of things. So the way we look at it on our skew scatter report or our realized skew report is we look at the shape of the current skew. We look at what it was a month ago, 2 months ago, and 3 months ago. And then we also plot the instances of spot and implied vol to see how the shape of the current skew compares to what has actually been happening. And you can see on HYG, and the reason I flag this because this is the one that's screening as the best realized skew. You can see that the regression line that goes through these dots on a 1 month basis is quite steep. Whereas the implied skew on HYG has flattened quite a lot. It's actually got hit. So what's happened is they've overshot the skew on HYG. They've flattened it so much relative to what's actually been happening to HYG volatility when the market moves. This thing looks to be quite good value now, right? So if we use that as our barometer, and it's similar to when you look at realized vol and implied vol. When you see implied vol get absolutely smashed on the market rallying, you sometimes see that implied realized differential look really, really large. And that's basically the same thing we're seeing in HYG skew. We've seen HYG skew get hammered, but the realized skew has actually been quite decent. And it's now looking to the point where this skew might have flattened too much. So those of you who still are looking for crash protection, we obviously mentioned that we like S&P skew here. We think it's starting to reach a bit of a bottom. We think it's worth starting to load up on some if you are bearish still. HYG, same story. And in HYG, the big difference would be that I'm probably more comfortable selling upside in HYG than I am in things like S&P or NASDAQ, because the squeeze potential in stocks, I think, is far greater than the squeeze potential in something like HYG. And that brings me on to the trade idea. We are seeing people buying well out of the money VIX puts in terms of the flows that we're seeing. They're doing that in November. They're doing that in February 23. It kind of makes sense as a bit of a hedge if you're not set up for the scenario where vols get crushed. As a just-in-case type trade, they kind of make sense if you've got a long vol book, owning some of that convexity, because VVIX is so cheap and so low now that you're getting the premium on those downside puts on vol are looking very, very low, thereby making the risk reward look quite nice. Anyway, you can read more about that in the daily note. That's enough for today, and I will catch you guys next week. Have a great weekend and speak to you soon. Thanks.